Hey folks, it's Braden Coop from the Stone Coop Real Estate Group at Remax here in Kelowna. Thank you so much for tuning in today. We're talking about an interesting article for 2024 predictions released by the BCREA or BC Real Estate Association, the economics department. Now, some of their key findings are answering the questions on everybody's mind around mortgage renewals and mortgage rates. So let's dive on in. Now, the first thing they're talking about is a decline in mortgage rates. So we're coming in hot here. The forecast indicates a potential decline in mortgage rates in 2024. The average 5-year fixed mortgage rate is expected to fall to around 5.05% by the end of 2024, which is great. This decrease is tied to the falling long-term Canadian bond yields and Bank of Canada's anticipated reduction of its overnight rate. If you're finding this helpful so far, hit the like button and subscribe. Number 2. The economic recovery and challenges. So the Canadian economy showed resilience in avoiding a technical recession despite the slowdown in the third quarter of 2023. Now, however, they are seeing significant challenges ahead in 2024 amongst the interest rate sensitive sectors like vehicle purchases and tourism. The high borrowing costs may also delay development in the residential sector. So if you're thinking about starting your real estate journey in Kelowna, buying or selling, we'd love to chat, so please reach out. Now, number 3, the impact of the rate renewals. This is a big one right now. So a wave of mortgage rate renewals for both variable and fixed rate mortgages over the next couple of years could lead to an increased monthly payment for homeowners. This may require a slowdown in their consumer spending, which is what the goal is of the Bank of Canada. But basically anyone who's on a fixed rate mortgage who took it out a couple of years ago at lower mortgage rates, a year and a half or so ago, as they come back now to the bank or lender to get their new mortgage rate and new term and all that stuff, they're going to be hit with a higher rate, therefore increasing their monthly spending costs. Now, 4, policy shifts. The Bank of Canada's potential shift from a rate tightening cycle to lowering rates in 2024 will be crucial. Now, the forecast anticipates between 200 and 300 basis points of rate cuts, starting possibly in the spring, which is quite early here. This change depends now on inflation returning to a target of 2%. So if that 2% target doesn't get hit, well, who knows where we could end up. Number 5, persistent inflation in certain sectors. So despite the overall inflation easing, housing costs, particularly in the rental market, are likely to remain a challenge with strong demand driven by factors like immigration and limited supply. Rents are expected to continue growing at an elevated rate. This persistent inflation might keep overall rates above 2.5% in 2024, affecting the pace at which the Bank of Canada lowers their rates. 6, the long-term outlook. The long-term outlook for mortgage rates suggests they might stabilize at higher levels than what was seen in the past decade. If the Bank of Canada lowers its policy rate to the midpoint of the preferred range, 2 to 3%, this could mean a long-term run 5-year mortgage fixed rate of around 4.85%, which is higher than the last decade. It's still pretty reasonable, but a little higher than what we've seen in the past. So in summary, the housing economy in 2024 is likely to experience a period of adjustment with potential opportunities due to lowering mortgage rates, but also face challenges due to ongoing inflation in housing costs and the impact of higher rates on consumer spending and residential investment. So this report outlines a few interesting things. We've got mortgage rates coming down. We've got, over the last year and a half, a lot of pent-up demand. And when I say that, what I mean is folks who, life happens, right? So folks who need or want to make a move, but have just been holding off because conditions aren't quite right. When the number of transactions every month dips below a certain average point, we know that we have pent-up demand because every year we hit a certain amount of moves, or at least average that. When it drops below, we know that people are waiting for the right opportunity. So I think as soon as word starts to get out about this, of course, all depending on where inflation levels land, we could have a lot of people jumping into the market late spring, summer, or fall of next year. So thanks for tuning in, guys. Like I said, if you're thinking about getting started on your real estate journey, whether you're a buyer or a seller, we'd love to connect. So until then, we'll see you on the next one, and don't forget to subscribe.